Hey, I'm Taylor, a business consultant and strategist, and I'm here to teach you that you can scale your business sustainably. This is Simply Business, your playbook for structure, clarity, and strategy that grows your business without costing your lifestyle. Let's get into it. Matt, welcome to Simply Business. I'm so excited to have you here and talk all things business, property, investing. Welcome to the show.
Thanks for having me, Taylor. I'm really excited to be here and unpack a few key topics. It'll be fun.
I was saying to you off air that I'm excited to kind of go into a conversation, yes, about business, but also being able to actually use our business as a vehicle to actually build wealth. And I feel like going through like the property kind of journey will be really cool to talk about that. And it's a conversation I've been having with a lot of people. It's like one thing to build a business, but something else to actually build wealth beyond that. So I'd love to kind of hear for context. You've been in business for how long now?
We launched during COVID. So what's that? 5 years you could call it. Yeah.
And that's a buyer's agency?
Yeah. So founded Srama buyer's agency pretty much back end of 2020. And yeah, it's been a really fun journey. It's a service-based business, and I've moved from, in that short amount of time, I guess operator to building a team and leader, things like that. So it's been a really fun but tough journey too. Heaps of learnings, but really enjoying it.
Yeah, especially starting in COVID, I feel like so many businesses were born in COVID, but the worst time.
It really was. And it's funny, like anything in life, like the sliding door moments, like I was in a sport industry prior, and COVID obviously paused everything with the whole sport world. So it actually gave me space to design and architect the business out of my bedroom. I had a lot of free time. So I used COVID, I guess, wisely. I literally, and it's funny, me and my roommate at the time talk about it, because he's now my operations manager, and he was sort of the only person who's seen it eventuate. Like I'd wake up, I'd train during COVID in the morning, and then I'd literally just work on the business and try and launch this thing. And by the time lockdown was kind of finished, I was like, I let my employer know that I'm not coming back. And had a crack,
Yeah. Why a buyer's agency? Did you have a property portfolio prior, and you were interested in that kind of landscape, or?
Pretty much, like they always say with business, like some of the best businesses come from the pain point you had when you were on the journey. And for me, I used to play professional sport, and during my sporting career away from the field, I needed something to decompress and just get away from the emotional roller coaster of pro sport. So I actually got into property just, again, through some sliding door moments. But yeah, it took me down a rabbit hole. It was a nice escape from professional sport, away from the footy field. I was, buying my own properties at a young age, renovating, and I had a lot of fun with it. I really enjoyed the touch and feel of it, like seeing something that you bought and then maybe doing it up and then learning about leverage and drawing equity, and that sort of stuff really interested me away from footy. So when the time came where I unfortunately retired at the age of 26 due to injury, it was really tough. Obviously, it was my identity for so long, being an athlete. So I kind of just fell into the property industry. So it felt natural to me, and I ended up becoming that person I wanted back in my early 20s to lean on and ask questions around property and what's this and what's a broker and what's equity and all that. So I started becoming that for my teammates and friends, and then I was like, I need to turn this into a business.
Yeah.
And literally sliding doors, COVID, bang, business out of nothing,
Yeah. What did you feel like was the biggest gap that you noticed being an investor yourself that you wanted to create with your business? Like you said, those kind of, like I know even for myself, it's like I get the concepts, but I'm still confused, and like how to actually go about, growing your portfolio. So what did you find were the biggest gaps that you've now filled in the industry?
I would say number one is obviously there's the knowledge side. Like that comes from reps in the game.
Yeah.
So, I built quite a solid portfolio before I even started the business. So it felt quite natural to help people and give advice, which is easy. But the biggest one I didn't realize prior to starting the business, the biggest gap was people's value for winning back time and eliminating stress or decreasing stress.
Yeah.
So, for example, we work with a lot of savvy property people who have done property stuff before and are business owners, and they want to diversify outside of just their property, their business portfolio and business growth, but they don't have the time. They've got definitely the experience and they know what to do. It's just the time thing. So we've created systems and processes around, we track how many days it takes to buy property for clients. And we've sort of come up with the solution of how can someone achieve what they want in hopefully the quickest amount of time possible, but also the safest as well.
Yeah.
Because again, the flip side of that is a lot of people want to do property and they've got profits in their business and now they want to do it, but because they're so time poor, they just act.
Yeah.
Because as entrepreneurs, we're good at just having a crack.
Yeah. They'll take the risk.
Yeah, take a risk.
Yeah.
But they miss the calculated risk part and they don't spend the time. There's a lot of things that can go wrong with property. So combining both, buying the right property, not just the next property.
Yeah.
But combining that with understanding speed is also the market moving. So being able to decrease speed and allowing people to get into property sooner is a big pain point we've been filling.
Yeah. I feel like even for myself, because I've got one property now, I feel like the concept of getting a buyer's agent feels like, oh, you need to be in a really established investor. And that's like, once you're like a multimillionaire, you get a buyer's agent. But why would someone like myself, what benefit am I actually getting from coming to a buyer's agent and what would that process look like?
Yeah, it's actually a big misconception. And I guess that's why through the journey I've structured the business to just focus on Gold Coast. Two parts. There's the people who want to buy something to live in.
Yeah.
And then there's also people who want to invest in our great city too. And I've built a team who specialize in the certain areas. So for example, we've got specialists in our team who deals with just first home buyers.
Yeah.
Because first home buyers are probably the ones who need a lot of help, to be honest, because you don't know what you don't know. And they're the ones more susceptible, I guess, to being taken for a ride and potentially overpaying and buying the wrong property. And then off the back of that, more the wealth side, like people wanting to maybe leverage and, again, invest into our great city, understanding which areas are growing at what rate and what a rental yield is and vacancy rates and land to asset ratio, just understanding all those things too. I've kind of segmented it up to have a professional that looks after each sort of section.
Yeah.
That kind of makes sense. But I find a buyer's agent really helps people once they're mentally ready to buy.
Yeah.
So I always say a buyer's agent probably isn't for someone who's just browsing or just researching phase, because it can happen quickly, because just like you've put that time and energy into your business, you're about to employ a team full time that are about to do that for finding property. So right now my team are all scouring, talking to agents, negotiating, finding deals constantly.
Yeah.
So by way of volume, the amount of property that they're going to get access to versus yourself, who's also trying to work and
DIY it as well.
Kids and it just you are going to get more property.
Yeah.
And then the second part of that is more stock, but also the ability to get access to property that isn't on the market. So it's called off-market stock. So 70% of our business is called off-market.
Yeah.
And that's uncovered through relationships. All of our team are very well known on the Gold Coast. They get all the calls from all the agents on like, hey, you got someone for this? And a lot happens behind the scenes that the average buyer wouldn't kind of understand.
That's also what you're investing in, as well as being able to have that access.
I always say it's like you're also investing into someone's little black book of contacts.
Yeah.
Literally,
fully.
Yeah.
What would be like for someone that doesn't really understand how a buyer's agent works then? What's like the payment? Like, how does it work for someone that, maybe they've got a couple of properties and like, okay, cool, I'm going to engage you to actually just take it over for me.
Yeah.
What does that look like?
Yep. So just like any business, I guess, number one is identifying what you need and what you want. And again, if you're not sure on that, that's where maybe just chatting to a team, a buyer's agent or someone from our team can just uncover that through asking you the right questions. If the team feel like they could add value, they kind of put together a solution that kind of suits you. So we've got packages on the lower scale that are just like hold your hand, and we got ones that is most popular where people do the whole thing for me.
Yeah.
Let's work together kind of thing. Most buyer's agents charge I'd say like an upfront retainer.
Yeah.
Some on the lower scale might be $1,000. Some might be $9,000. It really depends. But I'd say most of the good buyers agents are charging something up front for commitment. And then in our example with our team, it's like a holding deposit, and then they'll, I guess, credit that back on the back end once they find something.
Yeah.
So it's like a commitment up front to kind of work together.
Yeah.
They'll take the brief on, send you all the properties. We've got a in-house kind of app thing. It's pretty cool, and it's all very tech and very quick. And then by the time you buy a property and you're happy with it, then they credit that back, and then the team charge like either a percentage or a fixed fee, depending on how much level of service you need. And again, buyers agents can range from, at a lower scale, maybe 10 to 15 grand. I know some buyers agents, depending on property, it can be 100 grand.
Yeah.
So it just depends on how much help and service you need. But it's really a case of that's our most work, to give value to the listener. There should be something up front. If I always say this, if the advice is usually free, you're the product.
Yeah.
Someone's getting paid from amongst somewhere in the process, and it's just something I'm really passionate about, understanding that, it's a pay for service thing, but there are kind of people that label themselves as buyers agents, but they don't charge anything, but they're getting paid from whether it's developers or property spruikers on the other side. And then, there's a lot that happens in the industry that I think it needs more regulation. Yeah,
my partner and I actually kind of not fell for the ads, but there was ads of like, I think it was something similar to that. And we're like, this sounds great. Like you get like this guarantee and all of the things. And again, same thing, it was free up front. And my dad's been in business like my whole life, and he's very like, this sounds too good to be true. And I'm like, Dad, just like, no, this is great.
Yeah.
And he came onto the call, and this poor sales girl just like got absolutely
just got roasted.
Yeah, and he's like, so are you creating the growth and all of the things? And for him, if he's listening, what's the kind of concept as well that kind of separates you as a buyer's agent? Because he was, one of the points he made was like, well, you're just creating the growth in a certain area that you're predicting is going to be the growth area. What do you have to say to that in terms of the approach that you guys take and the difference?
Yeah, that's such a good question. And to go a layer deeper, what you're talking about there, or what your dad identified, is actually very true in what's happening. So what's happening is some buyers agents are what I call inflating markets. So by projecting areas and estimating growth, like they take people on board and then they're just buying all these properties and pushing prices up, area. which is, I call that inflated growth. Hence why with our business, we're geographically locked. We stayed in one city that we're passionate about and we know, and that's it. So for example, a lot of buyers agents will buy kind of wherever in Australia. And I always say, just be mindful of that, because again, I've realized the ability, you need to have people on the ground. Like you can't buy not being in the city. Like you just can't, you don't have the relationships, and you don't understand the market. There's no way you can understand the market from a desktop. It's just really, really hard. So I'm really passionate about it. It should be boots on the ground. So we take more of an approach on what the goal is of the client. Owner, occupier, is it an investor, whatever it is. And then we get a gauge on what their borrowing capacity will be. And then that will dictate the type of property or the area and things like that. So
cool.
Quick examples, like obviously beachside's doing really well on the Gold Coast right now. Everywhere from basically like Paradise Point down to Coolangatta within a 600 metre radius of the water is doing pretty well. But within that, you got to understand what, that's the location, but people don't understand there's units, there's duplexes, there's high rise, low density. There's a lot of different other sort of factors. So it's not always around just these hotspot areas or, buying this area and you'll definitely go up. It's not the case. I definitely, this is my biggest advice to anyone. Most of the money you'll make will be on the way into the deal.
Okay. Expand on that for me.
So if a property is worth, say, $1 million for argument's sake, and you have the ability to secure that one for say 950, 960, whatever, most of your uplift, you've got uplift on the way into it already. So that's one part of it. But then if you're buying in a good area that's going up too, you obviously capture that uplift as well. But I truly believe if you're paying, like as I said, what some of these other ones are doing, they'll buy nationwide and they'll just pay what it's, above what it's worth, asking price to just secure it.
Yeah.
And then they will inflate the price. You miss a lot of margin, basically. So I always just believe is in real estate, you make your money on the way in.
Yeah.
So you need to kind of build that equity quickly, let the growth do its thing. Obviously, we're very lucky on the Gold Coast. It's growing rapidly.
Yeah.
And then there's other ways you can pull on levers like renovation. And I was really big on doing cosmetic renovations. Put simply, that's like paint, carpet, fans, basics.
Yeah.
That's a good way to uplift equity too quickly.
Yeah, cool.
Yeah.
Is your approach with your portfolio, and it might be different based on the property, but just really building that rather than selling, like you're just literally holding the properties?
Great question. There's so many different ways to build, I guess, wealth and property. That's also another thing. And where people sometimes get stuck too is there's actually so many ways to skin a cat, right? There's duplex development, there's knockdown rebuilds, there's renovation, there's commercial, so many. I find if you're maybe just starting out or similarly your position, Taylor, where you want to build, you're in what I call accumulation stage. Mm-hmm. I believe the best way to build wealth quickly is to accumulate assets that are going to grow over time.
Yeah.
And I like to personally buy things where I can also add value to it to push the equity up. So for example, most of my portfolio, still to this day, I've never sold a property.
Yeah, wow.
Yep. So it's been a lot of I'll buy below market value, what I deem as below market value, because again, I've got to make money on the way in.
Yeah.
Stage 2 then is I will buy things always that are neat and tidy, but not brand new at all. I never touch anything that's had a lot of work done to it because I want to do the work myself, as in like I will engage tradies to.
I was going to say,
yeah, not me, not me. Yeah. So yeah, things that are maybe original, a bit rough around the edges, and then I would paint, carpet, fans, super basic, not overcapitalized.
Yeah.
And then I would rent the thing out.
Yeah.
And what that's called cash flow. You start generating cash flow. So as time goes on, that cash flow starts to increase if you're buying in the right area because of the demand of rentals in a certain area. So Gold Coast is a good example. Like most of my properties on the Gold Coast, every 12 months, we have to put the rent up.
Yeah.
Like not just $10, like $50 to $80 a week difference. So it's constantly going up. There comes a leverage point in time where that cash flow surpasses the rent, the repayments on the property.
And that doesn't happen instantly necessarily.
No, well, again, cycles are different.
Okay.
These days, no. It would be very hard to find something day one because of interest rates and the cost of property now to just buy it, positive cash flow straight away.
That's where I'm
in good
impatient.
areas.
I'm like, what do you mean that I'm not making profit off this?
Yeah,
And
yeah.
I'm like, it's long-term, Taylor. It's been a year.
It is. And this is what people forget, right? This is the cash flow side. So this is the rent return side. What people don't know, the big one though, I always say cash flow will help you hold a portfolio. Capital growth is what will make you wealthy.
Yeah, I love that.
So the biggest, because I've now been investing for over 12, 13 years, so I've gone through maybe a good cycle or two now, I've realized cash flow is great. It's cool. It helps us with servicing.
Yeah.
But the silent capital growth in the background, that is the thing where it's just like, wow, like it has really changed my life. But it doesn't happen overnight.
Yeah.
It's literally like it kind of hits you in like year 5 to 7 and it's like, oh, wow, like I could sell this thing and have this amount of money. Or the cool thing around property is with that capital growth, you can actually like somewhat to make it easy. It's called equity. You can kind of pull it out and then use that growth to go buy more
and do it again.
Properties. Yeah. So that's why I love capital growth, because the ability to leverage against it and keep going is big. And it's the gift that keeps on giving. Once you pull equity out, if you bought in the right location, it will just keep growing time and time again. So that's what I call like accumulation stage. Just be patient, work on accumulating. If you know you're going to have good servicing or like you're in a stable employment or whatever it is, just try and focus on, always going back to the bank, seeing if they'll lend you any money and put it into something, let it grow. And then there'll come a point in time where the more you accumulate, then it becomes around debt reduction at some point.
Yeah.
But too many people try to focus on all that real fancy stuff. I just think keep it simple. Just more you can accumulate in good locations with the ability to hold it, you're going to do really, really well.
Yeah. I don't know if you're open to speaking about this, but being that there might be a lot of business owners listening to this, I feel like a common thing is like asset protection in that sense.
Yeah.
And then I know as well, once you kind of like start getting more, you want to be intentional around like trusts and buying through companies. So even if we touch on it as very simple terms, what's the process? I'm going to use myself as an example. So got my company, we've got our one investment property personally. So if we were to go and say get another investment property, what's the best way for us to structure to keep that asset protection and also from like a borrowing capacity standpoint? Hey, so sorry, but I'm going to quickly interrupt this podcast episode to quickly chat about the Business Accelerator. If you've been enjoying the podcast content or what I'm posting on social media and you want to work closely together with me and my team, the Accelerator is going to be the best space for you to do so. Think of the Accelerator like a business development hub where you have access to me and our resident consultants, so you can be super supported in every area of your business, whether it be operations, client experience, finance, or marketing. We then support you with implementation. So no more courses of just the how-tos, whilst you also get that inside of the Accelerator. It's all about us actually supporting you as you implement. You get fortnightly check-ins where you submit your data around your revenue, your marketing, and how things are actually performing. So we can recommend adjustments for you on a fortnightly basis. You have access to advisory calls where you can have access to me and the other resident consultants to ask questions, get feedback, and get the support you need as you're implementing. This isn't going to be something that adds something more to your plate as a busy founder. It's going to be something that actually takes away from it so you feel supported as a founder. You can find out more about the Accelerator on our website. We'll link everything you need in the show notes, or feel free to just DM me on Instagram if you want to find out more and see if it's going to be the best space for you. Let's get back to the show.
Exactly, yeah. And again, obviously not financial advice and purely just an opinion. Obviously, I'm not a broker. I'm obviously not a broker or an accountant whatsoever. So any advice I kind of give is just purely my personal opinion and personal experience. But I always believe, and what I learned from my mentors and also accountants is personal names I feel sometimes good to exhaust. So what I mean by that is a lot of people will get into the whole trust thing straight away. You got to remember trusts, yes, there's levels of protection, but at the end of the day, you always got to think, how can you leverage into more assets? Because remember, we were talking about accumulation is the goal. So I'm always just worried about how can I accumulate? How will the bank continue to give me money? Sometimes going into trusts and things early may impact that. Chat to your accountant. That may impact that. Personally, because of my situation, I just try to exhaust my personal name. So my first, I think it was 4 properties were all just personal name. From a land tax point of view, there's benefits with that. Obviously, there'll come a point in time where after, you've accumulated a few in personal name, your accountant may suggest, yes, now it's time for trusts. With trusts and entity structures, things like that, the way I look at it to keep it really simple is see it as like another person, really. It's like Taylor personal name. Then there's Taylor Trust One. That's its own kind of person, I guess. Its own entity. That has different constraints around borrowing and, land tax and all sorts of things. There's all different, again, don't want to go into depth, but there's a lot of differences depending on where you buy, locations, type of property. There's so many differences. And then, I personally, what I've done is, I'll accumulate depending on where I buy, depending on land tax, because I own a few properties, different states and territories. So that will dictate whether we put it in a certain trust, things like that. Also, I've got a commercial property that's in a commercial trust. So there's lots of different, and then the business is in its own trust. So yes, asset protection is important from my experience and what I've understood. But I wouldn't get too fixated. If you're just starting out, don't make it as complicated as it needs to be. Just personal name's the easiest way to get a loan and move forward.
Does it become a piece when it is in your personal name from a like borrowing perspective of like your income and being intentional, especially again when that it's like a business, I'm like, okay, I can choose my wage and what I'm drawing and things like that. So I can always increase my salary kind of. But like, is there limitations in that people need to be mindful of?
The best advice I can give there, Taylor, is for any business owner listening right now, the value of having a good, savvy accountant is worth its weight in gold and some.
Yeah.
Because what you just kind of asked me there is something I get, obviously I can give it an answer, but all I would say is I'd throw that over my shoulder to my accountant.
Yeah.
And having a good accountant A and accountant B, they will give completely different answers based on their experience. So I would say if my accountant is very property focused, I looked at his portfolio and it was like, that was attractive. That's kind of the goals I want. So I'm going to learn off this accountant because the way he structures things would be different to someone who's very stock heavy potentially.
Yeah.
None is right or wrong, just whatever's suited to you. So all I would say is, like anything in life, if you want to level up your game, you need to find people who are on the path you want to be at.
Yeah, I love that so much. It's a conversation Dad and I actually had around accountants because he's like, well, so many accountants actually don't have their own business. And I think that's what people can fall into a bit of a trap when that, and I've gone through so many accountants where I'm like, wait, why am I taking advice from you when I have a higher net worth than you? And I think that's so important, that point.
The one thing around I've learned in growing wealth and business and things like that is I always use the analogy of like you got to get in different rooms. So for example, when I started my business journey and also my property journey, you're in a room, right? And you're at the party and you're associating with similar where you're at. And then you see a room in the back corner and you open that and then you go inside there and they're talking completely different things. They're talking about trusts. They're talking about scaling teams and learning about debt recycling. And you're just like, whoa, I am the least knowledgeable person in this party right now.
Yeah.
Then you start associating and learning more. And then you see this other room at the back and you open that and you walk in there. And then it's around like, developments and again, like recycling strategies and tax efficient way, and you just constantly, the analogy and why I'm saying that is because I always believe you need to keep going into different rooms.
Yeah.
Especially if you want to keep excelling and learning more, there always comes a time where you got to be mindful. Do I need to upgrade my room, my surroundings? And that's not always got to be like friends. It's like I pay a lot of money for mentors.
Yeah.
Always, because the best investment you can make, if we're talking about wealth and investing, is in yourself. Hands down. Every investment, I've built up a significant property portfolio now and I've got a business, but hands down, the best ROI has been every time I've paid money to put back into my brain.
Yeah. I was going to ask that when you were talking about your accountant who has been really pivotal in your journey. You mentioned mentors that's really contributed to your growth. Who are the people that you have in your corner right now in terms of, like your accountant, like you mentioned, to really ensure that you're continuously opening new doors, if you will?
Yeah, definitely. If most of the listeners of this are in business, I'm assuming, and then maybe want to do some property stuff or share, whatever it is, accountant, obviously.
Yeah.
I'd say get a savvy accountant who's been through a few doors.
Yeah.
Finance broker, huge, because the way someone will structure your loans could be the difference between you being capped at property 3 and property 10.
Yeah, wow.
For sure. So again, make sure your finance broker has walked the path you want to go down, because there's a lot of strategy in how you structure things finance-wise. I truly believe real estate wealth and building wealth in property is a finance game.
Yeah.
It's not a property game. The touch and feel of all the property stuff is cool, but at the end of the day, without the ability to obtain finance, you don't get to play the game.
Yeah. It's full monopoly. Like if you don't have any money, you can't buy.
You can't play.
Yeah.
Exactly. So real estate wealth is a finance game. So obviously why a broker is really important. And then I would say just having all those key people. So I've always got, legal people like solicitors, conveyancers, building and pest people like builders and people who can assess the actual property. I use bias agents myself, believe it or not, in other cities, the cities I'm not focused on. Again, because I've realized I value my time elsewhere.
Yeah.
So I'm always willing to pay someone else to go do that. So yeah, someone to find the property for me. And that's a good solid team I feel in the property world is like definitely accountant and broker because the correlation between your business and property is big and they play a part in both. And then from the property side, once you nail those two, yeah, solicitor and buyer's agent would probably be the ones on the ground helping you with all that stuff too. And the one that's really struck with me big as of late, Taylor, has been the team for you as well. So what I mean by that is I invested in a house manager last year to free up my time. And this is where I see a lot of people get bogged down is they realize they've got all the investment into wealth and they got all the investment into business, but they're starting to diminish themselves personally because they're so busy. Right. And a lot of it because as entrepreneurs, we will wear all the hat and we will keep moving and shaking. But I find people don't pay enough attention to on like who's in your corner in your personal life.
Yeah. Yeah. Even booking this podcast with you and it's like assistant and it's like, yeah, there's no point you going back and forth to find the time.
Exactly. Yeah. I've realized the ability to save time and energy is, again, I know it's not sounding like it's nothing to do with the whole wealth thing, but I need to be able to have good decision-making muscle space when the time comes. And by making so many decisions in a day, like ironing, cleaning, booking in. What's for dinner? Yeah, exactly. Yeah, people underestimate the decision fatigue aspect.
Yeah. I feel like something I could like foresee people hearing is almost like, when's that point that you make that decision, right? Because it's almost like you don't necessarily get the return right away. You've got to pull the trigger and say getting a house manager before it actually is like, oh, is my time worth it? I think you think it's for the ultra rich where it's like, no, that's what's going to allow you to become wealthy.
Yes.
What's been your thing in terms of like, as you've continued to like outsource and constantly leverage your time in that way, that's been okay, this is the right decision. Does that make sense? A loaded question.
For sure. No, I know exactly. It's nearly like, what's the equation to know when it's time to invest, I think, into
Can
help
you tell I'm
for
logical?
yourself. Well, it's funny because I'm, I guess, a bit more of a feeler, I guess. So, for example, for me personally, it always came down to when I felt getting close to that burnout.
Yeah.
We all know it as entrepreneurs. You're less optimistic. You're a bit more shorter with people around you.
Yeah.
You're not doing your hobbies as much anymore. You look at your week and it's all work.
Yeah.
And my favorite one is you look in your phone and you go into photos and you look what photo and it's been 2 years since you've had a holiday. And I say that to a lot of like, check your phone now and show me what holidays you've had because you need a rest.
Yeah.
So when you feel like you're getting to that point of like, like you've already probably too late.
Yeah.
That's probably one thing. From a feeling sense, I think what's the opportunity cost of you continually feeling that way?
Yeah. Yeah.
So that was my thing of like, well, I don't want this and I actually don't care how much it's going to cost because my health and well-being is more important than anything else.
Yeah.
So that's been my equation. I've heard equations as well, like your dollar per hour value from a more logical sense.
Yeah.
So potentially top line revenue, what was it? And then divided by, there was a certain number. But I guess think of how many hours you work in a week, maybe divide by top line revenue, and that might give you a baseline like dollar per hour value.
Yeah.
If your dollar per hour value is $100 an hour, for example, a cleaner's $80 an hour, well, you should be getting a cleaner because your time is worth more than what it costs to get a cleaner.
Yeah.
That's probably a really easy way. The hardest thing though, for anyone listening, whenever you're in the stage of wanting to outsource, the hardest thing to absorb is the cost leaving for the uncertainty of, is this actually going to work?
Yeah.
And to give assurance to people, every time I've invested into winning back my own time, it's not only helped financially, I think because it's done that, that's come from a place of because I'm feeling more fresh.
Yeah.
Potentially. Yeah, literally. I know. And that's what I put it down to. And so the whole concept of what I'm trying to explain is I think people underestimate the value of them feeling like they are fresh coming into the day.
Yeah. Yeah.
Big time.
Yeah.
As entrepreneurs, right? We're like, we can roll up the sleeves and we've had no sleep.
It's like just because you can doesn't mean that you have to.
Yes, or you should. Yeah, exactly. And again, the more rooms I've got in and I've gone to different health retreats and, meeting like very wealthy people, like a different scale, like again, they're actually quite fresh and they all do like all these retreats and they eat really well. Like they just all really value their energy.
Yeah.
Yeah. And I'd pick their brain and I've realized like health is wealth. Yeah. Yeah.
Yeah. I feel like in the like podcasting space and like what you're hearing from even thinking like Alex Hormozy and things like that, you're just hearing more and more how much people like prioritize your health. Like no one's really celebrating the people that are like sleep deprived and like running off caffeine anymore, which I think is a really cool shift as well. It's like not celebrated.
Yeah, I totally agree. And one thing I'm really passionate about is the real estate industry in particular. People celebrate people who can work 80, 90 hours a week, 7 days a week, and things like that. I just don't – I think there's a better way.
Yeah.
And I think there's a smarter way. Working hard is a prerequisite to success. You have to be able to grind it out and work your butt off. But I also believe there are a lot smarter ways to work harder and leverage your time and energy better.
Yeah.
And if there's one thing I value the most and I've learned to understand, especially moving through the real estate industry, is that the more energy you have, the more personable you become. We're in a people game, and I don't think people, again, value the time and effort to put back into themselves, to make themselves feel the best version of themselves, the energy they put out and they approach the day, shake more hands, the more money they'll make, and it's a fresh feeling versus I just think the grind culture is definitely becoming less cool.
Yeah, and I think as well when that you are the service provider as well, like, well, why do I want to invest in you if you've got like bags under your eyes and you like can't even answer the phone? Like people aren't going to invest if you can't be fresh as well. So treating yourself like the investment that people are getting. And if you're not taking care of yourself, people aren't going to invest in you.
I think you've summed it up good there, Taylor. I think, it's been cool talking on like wealth and investing and things like that. But I guess a big concept of the success I've built with the business and my property portfolio from a young age has been because I've always prioritized myself first. I've always looked at my income and invested number one into my health and wellness and hobbies and travel. Like I love what are the things you actually enjoy? Because again, I just find people are not investing into self much. And it's like this whole selfish feeling nearly. It's like, I don't know. I just think it's like the first person I'm going to look after is myself always.
Yeah.
So I don't know, maybe it's a mindset shift too, because I know some people might feel really selfish doing that and feel really selfish getting a house manager and getting an executive assistant to do everything for them.
Yeah.
I just think that we were on this planet once, right? And I think look after yourself, like value your time and energy, and all the other stuff will become easier as a byproduct, I think.
Yeah, I love that. Do you feel like you're successful?
I think so, yeah.
Yeah.
I do.
What's your definition of success then that you want to strive for? Like, what are you working towards?
I love that. And it's funny, this question. I'm a very self-reflective sort of person, and the whole success thing, and people say successful, and I truly believe everyone has a different version of success.
Yeah.
And I think the only scorecard of success is going to be from the inside. So what I mean by that is like, I love that you asked, do I feel successful? And I said yes. And I genuinely do believe I am, to myself and what I believe. Couldn't care what anyone else thinks or says, but like nearly my definition of being successful is the internal validation of self nearly. like just waking up feeling like I'm enough.
Yeah.
And no money, no extra houses, no extra top line revenue. I don't need that to feel more of me. I will do all that and I will strive because I'm ambitious and I love that about myself. But whether I get there or not, it's not going to determine the way I feel about myself.
Yeah. I love that.
That makes sense, because I truly believe with business too, people say business is my baby and things like that. I get it. You know, I started business, but as time's evolved, I've realized business is a vehicle. It's a wealth building vehicle. Your baby is your family.
Yeah.
That's at home.
Yeah.
That's important. Your business is not your baby.
Yeah.
It's a vehicle to improve your life. There's a lot of other things outside of just your business, outside of your property portfolio. There's a lot of simplicity and, you know, your family, your values and things like that. So I think it starts number one when you are successful. What are your true values just as a human? Away from all the stuff, what you value. And then if you feel like you're living up to that, well, then you're enough.
Yeah. Yeah.
Yep.
I think it's one of those things where I feel like for business owners and entrepreneurs, it can constantly feel like the goalposts are moving. But something I love about that is like, no, I'm actually so satisfied with where I'm at right now and I'm good. How do you find motivation? Because I think a huge shift for people in business, I know for myself, has been going from a space of like pressure and pain, for lack of a better word, of like, I have to make this work versus, oh, things are good now. How can I find motivation to continuously build, if that makes sense?
Love that. It's a really good question. And I battled with this probably 12 months ago, I reckon.
Yeah.
Like I had just one of those pivot points of like, life was sweet. Like life's sweet. Like, you know, I did well with my property stuff and business is cool and it was generating cash flow and profit. And like, I didn't feel like I needed more or like so to spend, but I did want more, like because that's
like
what you do in business. Yeah. And I felt I was nearly like coasting and I loved my life. I'd travel 8 times a year. I had my structures set up for my life. And then I don't know, it was one day I was just like, I feel, and I heard a quote, which I'll tell you in a second because it really hit me. And it was just like, I reckon I can give this a good hard crack, actually, the whole business. Like I actually think I am capable of a lot more just internal. Like I want to give it a crack and explore. I want to open that next room and learn about scaling a business and where that takes me. I don't know, but I know I'm going to increase my capacity as a human and have some fun along the way. And I think number one is understanding that, again, like you are enough as is.
Yeah.
I think that's number one, is understanding the business and all that is not your identity. And I guess I've got hindsight from professional sport where when I retired, it was really hard because my identity was I was an athlete. That was my whole life. You had recognition.
Yeah.
People knew you. Every week you're 1 minute with the emotional roller coaster and it was just this big dopamine hit. And then when it's gone, it's like, well, you don't feel enough anymore.
Yeah.
So I worked through that whole thing. I realized, footy, I really wrapped my identity around being a footy player. So when I started business and I started recognizing from a new lens, a lot of people attach their identity to their business.
Yeah.
And the more the business grows, the better they feel. The more the business goes backwards, the worse they feel.
Yeah.
And I related that to sport because you play the best game ever, you feel on top of the world, and you lose by 50 and you're sacked the next week, you feel terrible about yourself. But that shouldn't define you as a human being.
Yeah.
Completely different. And that's why I think in business, I've observed a lot of people attach self to their business. So I think to answer your question, number one is the ability to, easier said than done, is just kind of attach you as a human being. Your business is a vehicle.
Yeah.
As I said before, it's not your baby. It's a vehicle. That's number one. Once I feel you can detach, then it's like, well, I'm going to give this a crack. I'm going to really try and grow as a person and go through this process now and, set up the goals and the 5-year vision and do all that and just give it a good hard crack. But then, as I said, I come through the I guess, chat with self, like what you're saying. Where's the balance between you're enough and why should I do more?
Yeah.
versus like when I have a crack more. And then I heard this quote and it was like about the true definition of hell. And the true definition of hell is when it's all said and done, everything's wrapped up, everything you built is kind of withered away, and next phase of life happens, whatever you believe that to be. And the person you became meets the person you could have become. And that sort of hit me because it's like, no, I know I've got a lot more capability in business. I feel like my skill, it was nearly like I feel my skills that I'm learning on the go would be not serving the world if I didn't give it a crack.
Yeah.
I feel there's a lot of people who could benefit from that.
Yeah.
So that's why I'm on the journey now, I think. So it's coming from more of a place of I feel I'm being pulled, not trying to push my way there.
Yeah. Yeah. I love that. Have you ever heard of the Dickens process? It's like a mindset process. You go into like a meditation kind of state.
Yeah.
And I think it's like if you follow like the journey of like what you're continuing to do, and then you get to like the end of your life, and then you do like the potential you. And then so you kind of like meet them. And I literally have a tattoo from a process that I did a retreat with that. And like it was crazy, like so morbid. But I was like, wow. And you think you're doing fine in life right now, but it's still like how much potential you have.
Yeah. And that's it. It's the little balance of like, that's it. It's like the drive of knowing that we've only got one shot at life. Might as well try and live out to the potential.
Yeah.
Versus I need my group business to grow so I can feel better about myself.
Yeah. Yeah. I love that.
And I think that's just come to me then after like chewing the fat with you on that. I think that's what it is. It's like, yeah, it's the pull towards I'm really capable. I know I'm capable of more and I want to do more to serve the world and I can create really good impact versus I want more and I want to earn more money because that's going to make me feel better about myself.
Yeah. Huge difference.
Huge difference. Yeah.
Last question for you. What did having a crack look like? So when that period 12 months ago, what were you like, all right, this is what I'm doing? And I know you mentioned mentors, retreats. Like what was the thing for you of like, all right, we're doing this?
Great question. I read a book called 10X is Easier Than 2X.
Okay.
That was an inflection point. And I read this book and it basically spoke around instead of trying to 2X your business, what would 10X look like? Because now I was in this mindset of like, let's go. Like I'm keen to just explore how far I can take my potential.
Yeah.
And it just talks for your business to go 10X right now, Taylor, it's not like to go 2X, it's a little bit better of everything.
Yeah.
To go 10X, you have to fully restructure everything, retrain you as a person, let go of a lot of the things you're doing already in order to go 10X.
Yeah.
So it's going through that exercise. And I read that and then I mapped out 10X on where we were to where we want to be. And I was like, I reckon I could do that in 5 years, for example. Ballsy goal from where I was, but it's achievable. I know it is. And then I'll just work backwards from that and just like, what would that look like? So if your revenue was 10X from today, maybe you're not in the right market or whatever it is, or where it just makes you think bigger, if that makes sense.
Yeah, I'm already like, clients. Like it's so true.
It's like a 10X vision, so different. And that was one part of it. And then the coolest part was the 80-20 rule that a lot of people have heard, but you apply it to the 10X principle that you need to start moving more towards your 20% and let go of the 80%. So if we were to logically apply that to, say, a business context, maybe at the moment you're doing sales, the marketing, the scheduling of your posts or whatever it may be, right?
Yep.
To go to 10X, you won't be able to do that.
Yeah.
You'll have to hire a team. What does that look like? You'll have to let go of doing all the sales calls. You might have to get a salesperson in. And it's just like, whoa, that's I've never even thought that.
Yeah.
Is that even possible?
Yeah.
Like that's scary. I can't let go of that.
Yeah.
You know, and then you have to rewire who you are.
Yeah, you see the limitations that you didn't even know you had in place.
The biggest bottleneck with every entrepreneur is themselves.
Yeah.
Hands down.
Yeah.
Even for my business, I'm still a bottleneck in our business.
Yeah.
So I'm really working hard and to give you, since that book, we've hired like 4 people in the space of only a few short months, which I would have never done before because I wasn't thinking 10x.
Yeah.
So I let go of a lot of things in the business. I also have increased my health protocols because I got a new car even. Because like the 2X version of me, I wanted a fresher car. And like, I don't know, it was just 10X around. And you started looking at everything in your life, and that really, really helped elevate me as a person. Because at the end of the day, for any of that to happen in your business, and if you are the founder, you have to change first.
Yeah.
You cannot expect your team, your business to change and go 10X if you're not willing to go 10X yourself.
Yeah. Yeah. I love that. I'm even thinking, just like reflecting on myself right now, where you can so quickly go almost back to like scarcity and like, hey, we've got to be intentional with money. And this is almost that thing of like outsourcing and, you know, making those hires. But it's like, okay, if this result was guaranteed, how are you showing up?
Exactly.
And when you show up in that way, the result then does become pretty much guaranteed.
And it's also, what does the 10X version of that look like for you? So for example, if you theoretically speaking, just say your revenue and profit was 10X from where it is currently, what type of person is running that business?
Yeah.
Would they be doing those things?
Yeah.
That's one way. The last thing I'll say, and this was a fun exercise in the book, it's called the gap and the gain. Mm-hmm. Really cool. So for example, a lot of people look at the gap, where they are now to where they want to be.
Yeah.
And there's a gap there, and there's a lot of things you need to change and improve, which is awesome. It's really exciting. That's the gap. A lot of people forget the gain.
Yeah.
Where they were to where they are today. And what people don't realize is if you could rewind yourself like way back, think of when you're at your lowest point in terms of maybe earning potential or income potential, and maybe fast forwarding now to where you are with your income that you're earning. Sometimes like a lot of people wouldn't even think that was possible back then.
Yeah.
And you're there.
Yeah.
So it's evidence that you've done it before.
Yeah.
And you didn't see it there, and now you're there. So that's really given me clarity too. I'm like, wow, I've more than 10X what I used to earn back in the day. It's just like, and I would have never expected any of this to be true.
Yeah.
And it just shows like if you dream big, it is possible. You've got self evidence that you can do it, and you've done it before.
Yeah.
It's just we sometimes forget because we're so focused on the gap, we forget about all the gains we've made.
Yeah.
So an exercise I do every week is I do a gains list and just kind of jot things down in my journal of where I've gained this week.
I love that.
Just training the brain on like, yeah, where have you grown a lot?
Yeah. And to like create, it's like that red car theory where like you're looking for things, you always see the red cars, but it's like if you're looking for gains, you're going to create more gains.
Yep. And more gains is more confidence.
Yeah.
More self-confidence means more risks.
Yeah.
Because you back yourself.
Yeah. I love it. I would honestly keep going. I'm like, I've got 101 questions, but I'll wrap it up here. But if someone's listening to this and they're like, okay, I want to buy on the Gold Coast, where can they find you, your agency, and you've got a podcast as well, so they can, I'm sure, binge that as well.
Yep. Yeah, no, we get a lot of feedback for the podcast. It's called Buying Gold Coast. So it's very deep dive specific for all things property on the Gold Coast. But yeah, the team, it's just Srama, Srama, and I'm on all the socials and things like that. So flick us a DM and we'll stay connected.
Amazing. And I'll link it all in the show notes as well for everyone. But thank you so much for taking the time to come on and share everything.
No worries. Thank you. Thanks, Taylor.
And that's another episode of Simply Business. I would love for you to rate this podcast, comment below if you have any feedback, DM me on Instagram, and even better, share it with your friends, family, or share on Instagram. See you in the next episode.